Hello, Brad Bob here. I want to go over leave and earning statement today, all right? Which is just your pay stub, okay? Pay stub that federal employees get. Just want to go over a few important things on leave and earning statements, point out, and things for you guys to look for. Let me adjust this here. All right, got your leave and earning statement here. And we'll just run through a few things, okay? So up here at the top, you've got your pay grade. Done. Okay, you got your pay grade right here. There's our pay grade. You can look at your hourly rate here if you want to. Not really important for anything. Basic pay. Okay, over here is what you're going to look at for retirement purposes for your high 3. The number that you're looking at there is this right here. Okay, and that's going to be your basic pay plus locality adjustment. All right. Things like overtime, differential, those things are not included in your high 3 for retirement purposes. Up here, you got your pay period, end date, and then you get paid typically a week later. Social, to have your last 4 here, service SCD leave, okay? So this is your service comp date for leave purposes, all right? Sometimes this is going to be the same as your retirement comp date. Others, it's not, okay? So keep in mind that's not necessarily your retirement comp date. That could depend on a number of things. If you had federal service and then you left and came back, you had temporary time, but military time. Right here, max leave carryover, 240 hours. That is the same for most federal employees. There's a couple exceptions there, like Title 38. So there's a section, a subset of nurses that can carry over something like 685, and then I believe one other portion of federal employees. But most federal employees can only carry over 240 hours. You got your leave year end here, financial institution. Here's financial institution for allotments. All right, and then we go down here. So this is your current pay. You just got your current numbers right here, and then you've got year to date over here on the right side. We keep going down here. Scroll down a little bit. All right, get into the benefits section of it. So we get into the benefits section. Couple things to notice here. One, this employee here has an allotment, $900 a month going to that. Okay, now one thing to definitely look for is this right here, FEGLI optional. All right, and if you have optional, you're typically going to have 2 lines for FEGLI. Okay, over here you've got 1. All right, and that's going to be your basic, but then it also has a code. Okay, you can see code 90 here. And over here you got FEGLI optional, and it has code B. So this person has option B, but we don't know how many multiples, all right? This is the amount being deducted per pay, $61, and then it gives you a to-date, year-to-date, how much you paid. Now, if you want to see, if you're not sure how much you have there for FEGLI, what optional coverages you have, you can do a quick Google search, FEGLI optional code 90, which I went ahead and did. When I did that, I found this right here, 90, basic and 3 times additional, okay? So this person here has FEGLI basic plus 3 times option B. Now, that is something to keep an eye on, okay? FEGLI goes up every 5 years. I've got plenty of videos on that. Where you can learn more about that, but it goes up every 5 years. By the time you hit 50, 55, 60, it increases a bunch, okay? So if you're in good health, you may want to look at replacing that option B. It could save you quite a bit of money over a 5, 10, 15-year time period, FSA, okay, that's flexible spending account. All right, having $109 taken out per pay for flexible spending account. And keep in mind, that's money has to be used in the current year, except for, I believe, you can carry over $500 now. Okay, but if you have medical expenses, great idea to do. Tax, federal tax, of course, got that. OASDI, Social Security, 249 held for Social Security taxes. TSP savings, another one. All right, a lot of people like to, especially as you get later in your working years, you want to maximize what you can put into TSP savings. Okay, at $648 per pay, I can tell you that this person is not on pace to max out their TSP. Okay, so that's something you can always adjust. Over here, we've got Roth deduction for TSP Roth. Okay, so if you have money going in traditional TSP and then money going into Roth TSP, you're going to have different lines for that. And then just a couple different lines for vision, FEHBs, your federal health benefits. Then you got your Medicare tax here. You've got your contribution to your FERS retirement. Okay, that's right here. It's very small. Depends on your traditional FERS or one of the newer systems. Then your state tax, dental, and your Roth deduction. Okay, now. One thing I kind of skipped over here, TSP data. This person is putting in 15%. Okay, you can find that typically up here in box 22. One other thing I didn't mention is cumulative retirement, okay, for FERS. That's $15,671. What that means is that this person has contributed over their working federal career $15,671 to their FERS retirement system. Now, what does this mean? Not much of anything, honestly. But let's say the only way I can see where this would have an impact of anything is, one, if somebody left the federal workforce without retiring, that's money that person could take out. Now, if that person is eligible for a FERS annuity at any age, 60, 62, I would say that you would be crazy to do that and take that money out. But it's something that can be done. Another scenario is, let's say somebody retires at the age of 62, does not elect a survivor annuity, okay? And the FERS annuity is $3,000 a month. That person collects their FERS annuity of $3,000 for the first 2 months and then dies. That person has collected $6,000. Well, even though there was no survivor annuity elected, this person has put in $15,671. So they would have a beneficiary that would receive the difference of this number minus the $6,000, the amount that the person had collected. Okay? Those are the only two scenarios where I see that number there can have an impact. And then just a couple other little things. You've got your annual leave and sick leave down here. So those are some things that you definitely want to be aware of. Prior year balance, 212, you're accrued for the pay period, and year to date, accrued year to date. So it'll give your totals of your annual leave, your sick leave. Now keep in mind your sick leave, you guys get credit for that when you retire now. So 226 hours of sick leave, that's not something that has to be used before you retire. And your annual leave, I mean, anything under 240, you don't have to use. Actually, you don't even have to use under 240. So if you retire at the end of the year, you can carry over your 240 from the previous year and then accumulate, I believe it's 208 throughout the year. And really, you can get paid out on 448 annual leave hours. Now that would involve not taking any annual leave throughout the year, which most people don't want to do. But that could be done. In your sick leave, no cap there, but whatever's left can be tacked on to your FERS annuity. Okay, it'll be broken down into months, and any extra, if it's 6 months and 20 days, that 20 days will fall off. But it can be broken down into months. and then added on. So current balance 232 hours of sick leave. So that's about it. You've got your payroll office ID number down here, which I obviously deleted from this one. But just a quick review of your leave and earnings statement. It can tell you a lot about your benefits, a lot about what you're paying for, TSP, deductions, things of that nature. So it's worth looking at every once in a while to make sure that you have the benefits that you think you do, and to make sure that you're not paying for benefits that you're actually not using or you don't need. Okay? So that's all I got for today. Hope that helps. Thanks.